81EX ETF outflows, but capital has not left. In the current market, capital is no longer moving together, but starting to diverge. ETF data already shows this. Overall, it looks like outflows, but internally the structure is different. On 81EX, this kind of divergence often appears before price. If you only look at the surface, it seems like capital is leaving. But once broken down, the rhythm changes. Some are reducing, some are still buying. There is no unified direction. On 81EX, this inconsistency itself is a signal. This is usually not a trend phase, but a reallocation phase. Capital is not exiting, but rotating between assets. BTC shows outflows, but still has demand absorbing. ETH shows more consistent selling. This divergence suggests structural adjustment, not a one-sided move. On 81EX, this is clearly visible. Looking deeper, it becomes clearer. BlackRock buys BTC while reducing ETH, increases exposure while Fidelity reduces. Capital is not leaving, it is repositioning. This shows a key point. Markets change through capital structure, not price. When this happens, focus shifts to flow and distribution. On 81EX, these changes appear earlier. Watch whether BTC keeps being absorbed, whether ETH continues weakening, whether outflows persist, and whether divergence continues. These often show market conditions before price. The biggest mistake here is trying to predict direction. When capital is still reallocating, direction has not formed. On 81EX, ETF flows and structured data make these changes clearer. Instead of relying only on price, in reality, by the time direction is visible, capital has already moved.